With your spirit open and unconstricted, look at things from a high point of view. Miyamoto Musashi. That's what we ask you to do really twice a week. Once on Wednesdays to step back, clear your mind, and look at what is going on with the weekly chart. Also, the comprehensive review and forecast that we do at the end of every week is another chance to sit back and look at the big view, not get caught up in the minutia, but open your spirit up and unconstricted and look at things from a high point of view. That is the weekly chart. And it is extremely important that you do it. Why? Look at the weekly chart. Look at how incredibly accurate it is for a getting in point and long-term movement. After the weekly vertical crossover going up on the S&P 500 back on the week ending the 28th of June, opening somewhere around 290.98. Okay, and we don't get in first thing in the morning. Again, we wait for a jumping in point. We're just going to use that. We got to start somewhere. So we'll say, okay, 290.98. How high did the market go from that point until today? 302.01. So 290.98. I'm sorry, 290. Yeah, 98. $290.98 to a high of 302. So that's about $11+ over the course of 1, 2, 3, and this is just the first day of the fourth week. So again, that's pretty beautiful. We look at the weekly vertical crossover on the Qs. Again, lots of up movement. Look at 20-year bonds. That just happened. So we'll talk about that in a minute, looking for a jumping in point. Look at gold, where it crossed over going up back on the 7th of June. And of course, sometime jumping in that next week, we'll just again arbitrarily look at the opening of 123.49. And what is the high of highs? 134.73. So again, beautiful. Some beautiful stuff. Actually, it went up higher on that third week. 135.55. But again, the beauty of the weekly vertical crossover. So take that high view. Step back, look at the big picture. We're not talking about pennies in day trading. We're talking about dollars, tens of dollars, large amounts of movement. That's what's so beautiful about the weekly vertical crossover. When did it go wrong for us this year? One time. It just lasted a week and then turned around. That's the one time this year that we have not seen the weekly vertical crossover work. Not just this year, but going back, 2 years? I mean, again, that's just on the S&P 500. The other charts have worked for us for time and given us 2 weeks or more of movement. That was only one. And again, that's what's so beautiful about the weekly vertical crossovers. We have a special training for you. It is how to master the charts. That's a special training for you. If you're a subscriber, go to chartingwealth.com, sign up. If you are not, it'll be in your show notes for all who subscribe. We mail out the daily review every day, and we have that special gift for you. An 11th printing of the book. We'll talk more about that at the end of the program. If you want to have the book to supercharge your training, we have that available for you too. And also in that special training that we have available on how to master the charts, we of course, like we do every day, have links for you to the daily market worksheet, trade worksheet, and the weekly market worksheet. What do we see going on as we jump into the charts today? The S&P 500 down 0.18%, but look at our Heiken Ashi candlesticks. We see continued up movement, a bigger, actually, than the prior week, starting off on just day one, a bigger candlestick body with a little bitty wick on top. Price percent oscillators heading up, not as strongly as the prior week. This is only the first day of the latest candle. Looks like the derivative oscillator is flat. But again, price movement above that weekly trend line. What do we see going on the 2-day chart? Again, first day of the latest 2-day candle, we see an open body. We look at the wick. We see things are not as high as they were on Friday as far as the highest movement, but the candle body is higher. We see that our price percent oscillators lost energy. Derivative oscillators about flat. Price percent oscillator looks like it's a little less than flat. So again, price movements above the 2-day trend line, above the weekly. Now let's delve into the 4-hour chart, see what there is to see there. Basically, what we had happen was things bumped up quite nicely Friday morning and afternoon, bit of indecision in the morning on Monday, and followed by some indecision tending up in the afternoon. Price percent oscillators about flat, derivative oscillators losing some momentum. So the week started off a little weak, but again, prices well above the 2-day and the weekly. We'll continue to keep our eye on things on the S&P 500 as the week continues to progress. Now again, caveat, this is the crappy time of year. Market doesn't have a lot of volume and tends to move in scrappy manners on the smaller charts. But as we said, we want to, as Miyamoto Musashi asks us to do, that is to look at things from a high point of view. That's what we always want to do, even more so in the summertime trading zone. Let's go to the Qs. What do we see on the Nasdaq 100? Well, let's go first, as we always do, to the high view. The big chart, we see that price movement is above the weekly trend line. Price percent oscillators heading up a little stronger than it was on the S&P 500 on the Qs. The Nasdaq 100, derivative oscillators gaining upward momentum. It's not flat. We go to the 2-day chart. First day of the latest 2-day candle. We have a green spinning top that's forming so far because it's got a wick on the bottom and on top. Price percent oscillator is less than flat. It's heading down a little bit, but still positive. Derivative oscillators lost some energy. Price is well above the 2-day and the weekly. And we go to the 4-hour. What's it showing us? Hasn't crossed over going down, but down movement in the morning. Lots of indecision and more in the afternoon, tending down. But price, it did reach in the morning all the way down to the 2-day trend line, but still in the afternoon, still well above it. So keep your eye on things. We'll continue to watch and see what there is to see on the Nasdaq 100 as well as the S&P 500. So we leave stocks, we go to bonds. Now that's where we had the weekly vertical crossover going down at the end of the week. And look at how the week starts off. Price percent oscillators pulling away from the red signal line. Derivative oscillators gaining upward momentum. So for the week, so far for the week, basically almost a red doji. And meaning indecision tending down. Price is, we're not drawing a trend line at this point simply on the weekly chart simply because we're in the first week after the crossover. So we do have a 2-day chart. Price movement is above that. We'll get to that a little more in a second as we transition right now to the 2-day chart. And that is where you see as the day started off up 0.03%. Price percent oscillators still heading down at about the same angle. Derivative oscillators losing downward momentum. Have a green open box candle that's trying to form. Not a big open box candle, but it is trying to form. And we go to that 4-hour chart. What do we see there? Up movement in the morning, down movement in the afternoon, crossover going up. What does that mean? Well, it means you can keep your powder dry and wait for this 4-hour chart to cross over going down, if indeed it does, before the 2-day chart rotates over going up. And again, that 2-day chart still moving down all right. What we'll wait for is for that 4-hour chart to cross over going down. We'll just continue to watch, see what there is to see. The big pressure is pushing that chart down. If some of you were looking at the 30-minute chart this morning, let's check that out. What did we see happen on the 30-minute chart? We saw around 10 a.m., of course, that's reflecting the opening of the market with that hammer up. But around 10:30, we saw things starting to lose momentum. So you had a jumping in point there, maybe around 11 or so. So you jumped in at 131.68. Okay, things hammered down, then popped back up, then moved back over going down. Market closed somewhere at 131.56. So you're a dime or so in the money. That's fine if that's what you chose to do. Remember, you have the magic of the weekly vertical crossover going down working for you. And of course, you have the 2-day chart, also the price percent oscillator going down. So that's fine. Keep your eye on things. Now, if you did jump in using the 30-minute chart, not a problem. Keep your eye on things. Watch how that continues to mature and progress, particularly on your 2-day and weekly chart. If you were watching the 4-hour chart because you can only check the market, say around noon or so, it's cool, man. Just wait, watch that 4-hour chart, see if it crosses over going down, and when it does, that's your jumping in point. Is that easy enough? Fair enough? Again, I want you to practice these things even in the worst season of the year. Now again, this is an inverse trade. So you're not buying TLT, you're looking at something like TBT. Now that's an ultra short. I don't have in front of me right now what just the short is on it. But again, those are things for you to look at. Or even better, if you'll listen to our video or watch our video that's on how to use freestockcharts.com and TC2000 for tracking your trades, you can do that too. In other words, you can just simply track what your getting in point is using TLT and then see how well you do when you make the decision to pull out. And of course, you're looking at how much it goes down. Remember, all of the inverse funds are going to either move, they have them set up to move at the same percentage up as the underlying fund goes down. That's on the inverse funds. Or if they're an ultra short, they might move it 2 times or 3 times, although you're taking a lot more risk doing that. But again, I just want you to practice. If you do nothing but pay attention to how much TLT itself goes down, that's fine. Find your jumping in point, do it, note it on your trade worksheet, and then follow it and see how well you can do. Lastly, we move on to gold. Gold up for the day, 0.67%. What do we see happening with gold? Well, we starting the week off with gold with an open box candle and a wick on top. It's not pushing as far as the top movement goes any higher than the prior week, this first day of the week. Derivative oscillator is still losing momentum. That price percent oscillator is heading up a little more. It's not flat, almost flat, but does appear to be heading up. We look at the 2-day chart. It's still in a confirmed down move on gold. So we don't have a trade on gold with that 2-day chart in confirmed down. Remember, we have to have the weekly and the 2-day moving in the same direction. Weekly's up, 2 days down. Derivative oscillator's losing some downward momentum. Price percent oscillator still heading down. What's that 4-hour chart doing? Trying to cross over going up. It looks like headed that way. Up in the morning a little bit, more up in the afternoon, like we said, up 0.67%. Gold is really, since it topped out back on the 18th, that was on the 18th of July in the afternoon, it has really been sort of sliding sideways and down since then. This is the biggest green up candle we've seen since that point. So we'll keep our eye on things. If we can straighten out where that 2-day chart is, might have a jumping in point to ride gold up some more. I'm sure looking forward to that when and if that happens. Folks, if you haven't ordered our book, we're in our 11th printing. We have a few copies left, sent several out today, fulfilling orders. You don't have your copy, we've got one for you, autographed and ready to go out. Just follow the link in the show notes and you can order your own copy. You want to supercharge your training, know what it is we do here every day in a very concise and readable format. We've got your spiral-bound copy of Charting Your Way to Wealth. It's also a way you can support the valuable work we do here for free for you every day at chartingwealth.com. You can also be a Patreon supporter. All sorts of great benefits for Patreon supporters, including a monthly question and answer live session that you call into and join me, and a stock ETF review of the ETFs and stocks you are interested in. I do that once a month. And we've got all sorts of special training, the short chart training, the quarterly chart training, the Bitcoin chart training, all sorts of stuff for you. So if you're interested, follow the link in the show notes to Patreon support. That's where we are, folks, as we end the first day of the week. Go into Tuesday the 30th. Remember, this month has 31 days, so the new week doesn't start until Thursday the 1st of August. Glad you're with us, my friends. God bless. All the best from the whole team here at Charting Wealth World Headquarters.